Most of us are taught to follow this one single financial blueprint, right? Get a job, pump money into a 401k, and just hope it's going to be enough. But what if there's a different way? A more intentional path to building a financial legacy that really honors your values and, actually outlives you. Today, we're going to dive into a pretty powerful blueprint that completely challenges that old system.
Okay, so here's our roadmap. We're going to start by exploring a totally different path to wealth. Then we'll pull back the curtain on the private engine that really powers this whole thing. After that, we'll see how to put that money to work, build a complete system around it, and finally, and this is so important, how to protect that legacy for generations to come.
To really understand this system, we have to start with the story that sparked it all. It's a powerful reminder that legacy isn't about where you begin, it's about the path you intentionally choose to build.
Think about it for a second. We're often handed this one-size-fits-all plan for our money. Go to school, get a good job, invest in things we don't really understand, and just cross our fingers for retirement. But for a lot of people, there's this growing sense that this path just leaves way too much to chance. What if there was a more direct, a more controlled way to build wealth?
Well, the author, Dorian Felton, he knows that feeling all too well. He shares his own pretty humbling journey of doing everything the right way, serving as a United States Marine, only to find himself and his young family starting completely over, packed into a tiny 988-square-foot home. It was right there, in that moment of hitting reset, that a whole new perspective started to take shape.
What's just so incredible here is the speed of this transformation. This is not a 40-year plan, okay? This timeline maps a journey from a conventional struggle, literally starting from scratch after serving his country, to achieving financial freedom and retiring from a traditional job at just 31 years old. And that was only possible because of a fundamental shift in strategy.
So what was that shift? Well, that dramatic change was powered by one foundational tool, a concept the author calls the modern wealth engine. And listen, this isn't some new, flashy trend. It's a time-tested strategy that the wealthy have been using for generations.
At its very core is a specially designed high cash value life insurance policy, but it is so important that you forget everything you think you know about life insurance. This strategy is not primarily about a death benefit. It is engineered to be a living benefit, a private, liquid, tax-advantaged financial system that you control and you use while you are very much alive.
And this illustrates the difference perfectly. The traditional approach is totally passive. You just pay premiums into this locked box that you can't touch. But the living benefit approach, it's active. You control the capital. It's liquid and ready for opportunities, and it experiences uninterrupted compound growth. You basically shift from being just a consumer to being the owner of your own financial engine.
Now, the real magic here is in the design. See, a small part of your premium secures the policy's long-term guarantees. That's the foundation. But the rest, the majority of it, is directed into something called paid-up additions. Think of this like an accelerator pedal. It's like you're prepaying for little chunks of insurance that immediately and dramatically boost your accessible cash value, giving you liquidity right from day one. This whole structure flips the traditional model on its head, prioritizing your access to capital.
Okay, so we've got this powerful financial tool. Now let's see how it builds from just a single engine into a dynamic system for creating real-world wealth. Because look, having access to capital is one thing. Knowing how to actually deploy it is everything.
This is where you literally become your own bank. You can take loans against your policy's cash value, tax-free, with no applications or credit checks, and with total flexibility on how you pay it back. But here's the real kicker. When you borrow against your policy, your full cash value stays right where it is, continuing to earn interest and dividends as if you never even touched it.
Check out this real-world example. A client needed a down payment for a rental property. So instead of going to a bank, he borrowed $15,000 from his policy. The rent from that new duplex then paid back the loan. And all through that process, his original money in the policy just kept on growing. This is how $1 gets to do two jobs at the exact same time. It secures a new income-producing asset while continuing to compound in the original policy. It's incredible.
So this single financial tool, that's your launch pad. But a true legacy isn't built on just one asset, right? It's a whole diversified system designed to produce multiple streams of income and to withstand all the volatility the market throws at you. The goal is to build a portfolio where everything works together in harmony. Your high cash value policy provides that safe, liquid foundation. Then you use policy loans to acquire things like income-producing real estate for cash flow. You can layer in dividend-paying stocks for consistent income, and you can even add a small allocation to an asset like Bitcoin as a hedge against inflation. See? Every single piece has a distinct purpose, creating a truly resilient system.
And even an asset as modern as Bitcoin is framed here with that same legacy mindset. This isn't about speculation or trying to get rich quick. Within this system, it's viewed as a strategic hedge, a kind of digital insurance policy, protecting the rest of your portfolio from a broken system.
So you've built the system. You have assets, you have cash flow coming in. That's amazing. But building wealth is only half the battle. Making sure it lasts for generations, that requires a completely different and, honestly, even more important set of strategies.
This really is the final and maybe the most critical question you have to ask yourself, because wealth without a plan, without a structure to protect it, and a mindset to steward it can be gone in a single generation. So how do you make sure that what you build actually endures?
Here it is, the final piece of the puzzle. A true legacy isn't just transferred, it's intentionally structured and it is taught. First, you have to protect it legally with something like a trust, not just a will. Second, you scale it with a sense of purpose, making sure the wealth is serving your core values. And third, and this is the big one, you pass on the mindset before you pass on the money. You teach your children to be stewards so they understand the mission behind the assets, not just how to spend them.
And that right there brings us to the ultimate takeaway from this entire blueprint. Building a legacy isn't something you get around to when you're older or richer. It's not an option you can just decide to ignore. It is your assignment, and it starts right now with the decisions you're making today. The real question isn't if you'll leave a legacy, but what that legacy is going to be.